Hello, I'm Donald Leggett and welcome to Share Views, brought to you by London South East. Today I'm joined by two special guests from ETF Securities, Townsend Lansing, the head of ETCs, and his colleague James Butterfill, who's the head of research. Welcome, gentlemen.
Thank you very much.
Let me start the interview by asking you to tell me a little bit more about ETF Securities and what you each do.
Sure. So ETF Securities, we are a provider of exchange-traded products that is offering a wide variety of access to kind of interesting underlyings. We primarily focus on commodities and currencies, although we have a range of thematic equities. We also offer access to kind of investors who wanted to get short and leverage exposure across a wide variety of underlying asset classes.
James?
Yes, I'm head of research and investment strategy. I think it's pretty understandable what I do. What I'm trying to do is deliver kind of content to clients to help them understand the markets and the most prudent way to invest. I also get involved in product development. So if we see some sort of very interesting theme that we think investors will really start to tackle or gain interest in the coming years, and we'll try to develop a product around that and support research associated.
And macroeconomics are your thing, and you've also been a fund manager in the past.
That's absolutely right, yes.
Fantastic. Okay. So acronyms. Can you unbundle all the acronyms? EDPs, ETFs, ETCs. What do they all mean?
It's a bit of an alphabet soup. I think the important thing to understand is exchange-traded product. That is a product that is listed on exchange. It tracks its underlying by means of an arbitrage mechanism whereby market makers are able to buy and sell either the underlying or the product to maintain a tracking price. In terms of the actual alphabets, ETPs is the general term. ETFs is the most well-known, the exchange-traded fund.
So that is exchange-traded products?
The exchange-traded products is an ETP. Exchange-traded fund is an ETF. That is generally a fund governed by the UCITS rules here in Europe that is itself exchange-traded. We offer not only exchange-traded funds, but also something called exchange-traded commodities and currencies. Those are known as ETCs. The reason you have some of this alphabet soup is because the primary mechanism in an exchange-traded fund under the UCITS rules isn't necessarily appropriate or even permissible for all underlyings. So for example, our most popular product, which is gold, is not allowable in a UCITS structure. Hence, we had to create a different structure to offer exchange-traded access to gold and other commodities.
And how long have you been doing exchange-traded gold funds for?
We have been doing it. Our founder launched the first one in Australia in 2003 and brought that to Europe. So he's pretty much kind of an early light in the commodity exchange-traded product space. We've been kind of operational since 2004 here in Europe.
So what are the advantages of investing using exchange-traded products then?
I mean, I think the primary advantage is ease of access with a very cost-efficient and transparent wrapper. So the reality is that, previously if you wanted to buy, say, something like gold, you either had to trade directly in the futures market, which requires you to, say, maintain margin accounts, open up different lines of credit and so on, or you had to actually buy physical gold to store it somewhere. We now, with an exchange-traded product, you can simply get exposure to the price of gold via whether it's your SIP or a normal brokerage account, very easily, the same way you would buy an underlying equity stock. So I think that kind of transparency and efficiency and ease of access is really the primary benefit. If you look at other opportunities, if you want to buy a thematic set of the Euro Stoxx 50, without an exchange-traded product, you'd have to buy the 50 underlyings. With an exchange-traded fund, you can simply buy one product, one transaction, and get exposure to 50 underlyings in a basket.
And James,
I would add that it is about that idea of access still applies today. So when we look at the various range of investment products or research ideas that we have, how do we translate that into an easily sort of purchasable product? And robotics is a good example. If you were to buy robotics, the theme today, you would have to create, or historically you would have had to buy a basket of different stocks, and so buying that or unwinding that trade is quite difficult. Essentially what ETFs do is you can buy it as you would one share, the robotics theme, and we take care of all the constituents and the strategy of the theme, essentially.
So are ETFs more used by professionals, are they more used by punters, or are they used equally by both in the same or different ways?
A huge mixture. Institutional ownership of ETFs is rising all the time. It's probably the average portfolio is around owns around 10% of ETFs, and we do expect that to rise over time, particularly in the institutional space. There's a lot of increased regulation, and they're being forced to be more transparent on costs, and typically ETFs are much lower cost, and so they're tending to buy those. Also on the other side of it, right down to the individual investor, they are an easy way to access products and are generally accessible to on most investment platforms.
Yeah, I think that's right. I think that the adoption of the exchange traded product as the premier kind of investment wrapper is really, it's been dramatic over the last 15 years, and that cuts across the whole investor spectrum, from the individual investors buying in their SIPs or their own brokerage accounts, to the intermediaries that service them, so the DFMs, the IFAs, and so on, all the way up through the institutionals into the pension funds and the insurance companies. And I think we see among our clients, as do our competitors, that whole range of investor kind of clientele looking at our products.
And you're highlighting long and short ETFs at the moment. So what are how do people use these?
Yeah,
how do they work?
That's a smaller segment of the whole ETP market. In particular, we obviously are one of the primary providers for investors looking to take leverage. You can, with a very quick, you can take leverage to a wide variety: leverage gold, leverage copper, leveraged equities, and so on. Going both long and short. Short, obviously, is the inverse exposure, betting the price of the underlying is going to go down. I think that is a very obviously niche segment for more sophisticated retail investors, also for their intermediaries. Mostly on a tactical basis. They're not buy and hold. They're not put in your portfolio and walk away. They're really for investors who, James talked maybe about the increase in volatility over the last 5 or 6 years in the market, who are saying, okay, yes, I have my traditional buy and hold strategy, portfolio diversification, Markowitz theory, but I also have 5% of my assets that I think I really need to invest to address some of the volatility and the risks in the market.
Yeah.
And that is kind of a segment where I implement tactical trading strategies or even hedges, for example.
Let me put that in sort of context. If you have a portfolio and you start to look at your assets in your portfolio, you think, wow, I'm really exposed to the US dollar right now. And maybe you have the opinion that sterling is going to strengthen further, it's reached the bottom like we believe, and you think it's going to continue to strengthen against the US dollar. You may want to mitigate some of those risks, because a weakening dollar is ultimately going to mean a weakening price in your portfolio if you have a lot of dollar assets. So you could look to sort of buy a sort of sterling-based ETF that helps hedge some of those risks of being overly exposed to something.
But is it a riskier product because it involves leverage?
Without a doubt. And it requires a more sophisticated understanding of how it functions. And again,
so not for widows and orphans?
Not for widows and orphans, not at all. That's the traditional term. Without a doubt, someone buying this product, whether it requires a level of sophistication, it requires a willingness to monitor your portfolio and your exposure, whether you're hedging or taking tactical, to have a clear view, and then to really trade that view. It is not something where you say, okay, buy this and walk away, come back 5 years. And for investors who are looking for that, kind of the short and leverage products that we offer aren't really kind of appropriate for them. What we're saying is, if you're an investor who has a particular tactical strategy or needs to hedge or has a level of sophistication where you think, wow, I don't want to trade, for example, CFDs, I don't want to trade spread betting, but I really want to trade more tactically with a bit more risk. These products are designed to service that investor.
A very good example, I think, was around the Brexit referendum. We had a client that was very concerned that the referendum was going to go in favour of Brexit, and so they decided to buy a long euro, short sterling product to hedge that risk.
Did it work?
Very much so.
Did. Sterling obviously fell 20% within a week. So
he was a happy client.
Yes,
and that client, it wasn't about capital appreciation actually. It was more about hedging the risk of a weak sterling in the event of Brexit's vote.
And do you have any trading tips for our audience?
If you look at the world at the moment, it's actually this very juxtaposed risk. On the one side, you've got really decent corporate earnings in the UK to the most extent, in Europe and the United States. So equities are rallying. It does leave some risk though, because valuations are starting to get a little bit stretched. On the flip side of that, you've got a lot of geopolitical worries. You've got North Korea, you've got Donald Trump. I think he seems to be very supportive of the gold price in every tweet he makes, and you've also obviously got Brexit too. Those are at risk of really destabilising what has been a fantastic rally in equities. So, I think adding something to your portfolio that makes it more stable, for instance, gold is a good example of that, would be beneficial. But I think also there's some fantastic, really interesting thematic ideas out there. So, for instance, cybersecurity. We know that's an increasing risk. Every year, cybersecurity incidents are rising about 66%. So that's a very interesting theme. And then again, robotics. In every kind of industry, it seems that automation is increasing in use, be it cars, agriculture, medical uses. And so that's, I think, a very interesting thematic for the long-term investors, say, sort of 2 to 5 years plus.
Yeah, I mean, from my side, moving away from, say, a macro or an underlying, I mean, we as providers, not only ETF Securities, but the competitors, provide a tremendous amount of information about the products. So do your research. There are a lot of educational tools, documents explaining the products, what they do, whether it's short and leveraged or just simple long Euro stocks or S&P 500. There's a tremendous amount of free information, and I really encourage investors who are looking to trade ETPs or even invest in them long term, however you want to use them, to go to the provider websites and learn about how the products work. That is, first and foremost, we are very transparent. We try to provide you as much educational material as possible as an investor, and it doesn't cost anything. It's free. It's on all the provider websites, and I really recommend that investors undertake that due diligence.
Yeah, we write sort of institutional level research as well. It's all free on our website, and it goes right from explaining all the geopolitical issues all the way to just very interesting thematics like quantum computing and its risk for investments in the coming years.
Let me finish by asking you, what are people buying at the moment? What ETPs are people buying at the moment? What's hot?
Yeah, I think the biggest inflows year to date for a while were gold. I think it's rallied so strongly, it's up 14% year to date. People have been taking profits. On the flip side of that, again, I mentioned earlier robotics. That's been incredibly popular this year. It's also had a fantastic performance.
I think that's right. I mean, we're seeing, in the commodity space, we're seeing actually some profit taking on things like industrial metals, people moving into agriculture. And clearly, in the currency space, there's renewed interest in the pound as it strengthens, and the euro against the dollar. Clearly, those are and the dollar's weakening some. So quite a lot of interest in that as well.
Okay, thanks, gentlemen. We're out of time. Thank you for joining us. I'm very grateful. Thanks to Townsend Lansing and his colleague James Butterfill for joining us, and thanks to you for watching.
Thank you very much.